Let's now connect with Devina and talk about how she views 2023 is going to be different from 2022. What are the similarities and what are the differentiating aspects for this year from last year? Devina, good morning. Thank you for joining us. Uh, what to your mind would be the similarity and the differentiating factor of 2023 if you have to compare it with 2022?
Good morning, Nikunj. First you have to look at what 2022 was, and it was a completely outlier year. Globally, I mean, not so much in India, but globally, it was an absolutely extraordinary year, extraordinarily bad, I would say, because many statistics going back 200 plus years, this was still an outlier year. So for US bonds, it was the worst performance ever in 230 years. If you look at both bonds and stocks going down together, again, it was one of the worst years ever. It's again like completely to the, if you have a graph, it's completely to one end. I think only one depression year. Uh, uh, at that time also the bonds didn't fall as much, so the stocks fell more, but the bonds didn't fall. So this was, and if you look at the whole globe, if you look at the whole, how all asset prices did, everything is in the red, barring, the only greens were within commodities, also only energy and a few agri commodities. Even industrial metals and precious metals gave up whatever gains they had during the year. I mean, the most sensible thing at the beginning of 2022 in hindsight would have been just to be in dollar cash, because the dollar was up 8% on the average across all currencies. So I mean, given that it was such an extraordinarily bad year, obviously, that is unlikely to repeat. I mean, you don't just keep going down into something that goes to zero. So, uh, again, past statistics show that after a very bad year, you're likely to have a somewhat better year. India, of course, was an outperformer, which I had predicted the beginning of the year also, that it will, because India had gone into the outperformance mode in 2021 after many years of underperformance, both relative to its own history as well as relative to global markets. So 2010 to 20, Indian markets compounded only some about 8.5% or so, much lower than the long-term average of 15 odd percent. And also globally, out of 42 indices, India used to be like 24, 25, 22, like that. So 2021 was the first year when it moved to number 13, which was proved lucky because that was in the outperformance basket. And I was quite sure that that would continue. So this year it was number 10, down 4.7% in dollar terms, but still outperforming, because global aggregates were down about 18 and odd percent. S&P was down about the same. So India outperformed by a significant margin. I expect that to continue. And again, you're not at extremes. Again, extremes reverse. If you look at the global equity markets, the top three markets this year, Turkey, Chile, and Brazil, were the bottom three last year. And the top two of 2021, which was Vietnam and Sri Lanka, were the bottom two this year. So the wheel turns. So we always extrapolate what's happened recently, but India is right now in a sweet spot where I expect it to continue to outperform. But again, it will be a selective market like it was in 2022, and the sectors may not be exactly the same, but you have to just keep an eye on that.
Devina, hi, morning. That's exactly what I wanted to talk about. Whether it's going to be only a relative outperformance because the rest of the world is not going to do that well, or do you think India will give handsome returns both at an index level and stock specific as well? Because I recall, just a month back when we were cheering about that all-time high, the large part of the street was not really celebrating because, on an individual portfolio basis, people haven't made money.
Right. So as I said, that for the full year, of course, there were sectors that did well and sectors which didn't do so well, and that may well continue. this year, as I said, in the global market itself, I don't expect the kind of, I mean, frankly, disastrous 2022 that you had. So for India to outperform, it has to give some absolute returns as well. So that is my base case as we speak today, that India should give positive returns. I don't see a big risk just now, at least, of big drawdowns in equity either in India and also in most parts of the world. On a relative basis, only thing which we are watching is that whether the leadership will pass from the US to emerging markets. That's happened in the short term, but want to see whether that shows that that could be a long-term trend. So that's one thing which we are watching. But India, as I said, that the risk is not being in the market, because the more likely scenario is that you will see the markets going up. But as I said at the beginning of 2022 also, it is not 2021 where everything went up. So you have to be selective in sectors and stocks.
Devina, hi there. Good morning. How time flies. We're already at the cusp of the next earnings season. And you had mentioned that when it comes to IT, you had been overweight from 2020. So what's the stance right now on IT, and any particular expectations from the earnings this quarter?
So we have not been overweight for a while now. Yes, we were overweight from 2022, and we were overweight right into from 2020, and we were overweight right up to 2022, which of course was not such a good thing in the first half of 2022. But thereafter, now we would be somewhat below market weight. I mean, not greatly below market weight, but somewhat below market weight. So this was one thing where our call on the rupee turned out to be spot on, and that the rupee would depreciate significantly, but our biggest export sector did not benefit from that. So that is, I mean, there have been two competing things there. One on the demand side, there has been some slackening, though from what I hear from most managements, because many of those projects are actually long-term projects of transformation of companies, the clients are not really cutting back much on that. There was another factor which was there through much of 2022, which was to do with the margins on the employee cost side, which the first few quarters had gone up, the employee costs. But that pressure I see easing, because a large part of that was coming out of the startups hiking salaries and taking away good people and all that. And the startup side, there has been and there will continue to be a big deceleration, because they are no longer have access to easy money. So that's a positive for them. I mean, fundamentally, I don't see anything greatly wrong with the sector still. But as I said, we might be like market weight to slightly underweight.
I'm reading a interview of Satya Nadella to the Times Group, and where he's talking about challenging times ahead for global tech. Again, I know that if you're comparing Indian IT with what the Microsoft CEO has to say, I'm comparing apple and oranges. But if the global tech space, whether it is Microsoft or Apple, whether it is Google or for that matter, any of the other tech names, if they are under pressure, do you think sentimentally it could have a rub-off effect on IT?
Well, it seems to have done that, because I mean, frankly, I mean, our IT services companies, the fundamentals have not been as bad as what the stock performance appears to show. So yes, it has had, but I mean, as I said, that the point is that, as you yourself said, that those companies are what we call tech in the US, whether it's Microsoft, Google, etc., is completely different from our services companies. And for the services companies, the more relevant metric is that now for more and more companies, whatever you call it, being digital or being online or being going away from only a physical presence, is becoming more and more important. So I would think the companies which are the client companies for these companies will continue, the enterprises will continue to invest in that, because you can't afford not to. So now the whole, again, the tech space is shifting once again.
I'm going to shift gears and talk about the reversal part which you alluded to. And we both know that in market there is nothing which goes one way. Cycles are always at play. So when we started 2022, financials were at the bottom of the barrel, IT was at the top of the barrel. 2023, the reverse has happened. What are the chances that the reverse could again happen by the time we wrap out 2023?
Okay, so I mean, in terms of financials, as I've spoken earlier on your channel, that's a sector I normally don't like. Having been a banker, I know that negative surprises can come out of nowhere, and especially if, as an outsider, you can never know where those negative surprises would come from. So, from the time we started our PMS in early 2020, we had very low weight in banks, which worked out beautifully. I mean, which was a risk because that's the highest weight in the index. So in 2021, if you see, banking was the only sector that was in the negative. In 2021, it was not in the negative, but the market went up, I think, 22%, and Bank Nifty went up 11%, so only half as much as the market. And 2022 middle is when we changed our stance. So from having very low weightage in banks, we went to market weight, which because of price action actually has become overweight now. Because again, banks came out of a very long period of underperformance, and when that trend changes, it lasts for a while. So that we are still we would still continue that stance. Though, as I said, fundamentally, it's very difficult for me to um, sort of be comfortable with banks. And also, the other thing is that fundamentally also things have changed for banks. For one, the NPA cycle is largely behind them, credit is growing well, and also as interest rates go up, it has a positive impact on margins because your loans get repriced immediately, the deposits get repriced slowly as they come for rollover. So that side also appears okay for now. So for now we are positive on banks. IT right now, no, but then we relook at everything every quarter. So I don't know whether later in the year things will change. If you look at last year, also many things changed during the year. Metals had a boom and bust. If you look at currencies, also dollar went up for the first 9 months and then didn't do so well in the last quarter. So 1 year perspective is difficult because things change. So that's why we relook at everything from scratch every quarter.
Other than banks, where else are your overweight positions and where is it that you're underweight right now?
So the biggest overweight continues to be capital goods and industrial machinery, where we have been overweight since I think October 2021, so about 15 months now. So that continues to be our biggest overweight. That's been a big winner also. There have been stocks which have gone up 2, 3, 4 times. So there's been a big move there. Again, it came out of a very long period of underperformance. For that, I think since 2008-9, there was like a 12, 13-year period of severe underperformance, as well as the fundamentals not doing well. But during that time, then the companies became more efficient, cut costs, and when the cycle began to turn, they could really capitalize on it, the good companies. So that continues to be overweight. But now it's been a reasonable time. So I don't know again whether it will last the whole year or not. But for now, that is our most overweight position. Other overweight sectors have really come from a bottom up stock picking. So, there might be textiles, there might be a few chemicals, there might be some auto components, but those are not necessarily sectoral calls, because in many of those industries, you have to really look at what is happening at the individual stock level. Because dynamics actually can even be contradictory, like in chemicals, that it depends on whether your input prices are going up and your margins are getting compressed, or your output prices are going up and you had a boom time in 2022. So those are more individual stock calls. In terms of what we don't like as sectors, oil and gas, refineries, real estate, I think those would be the ones that we don't like. Pharma we didn't like for quite a while. It would be now in the kind of the about market. We might still be underweight actually in pharma also.
Appreciate your time, Devina. Thanks much for joining in and sharing with us your outlook on sectors and the markets as a whole.